Hi everyone, Mr. H here. This is part 1 of chapter 3.4, Final Accounts. In this video, we will discuss the purpose of final accounts to different stakeholders, and we will also explain the first of the two financial statements that are part of this chapter, which is the profit and loss account. So let's get started. Final accounts are financial statements, are financial documents that report or inform stakeholders about the financial status or the performance of the business in a time period, in 3 months, 6 months, or in a year. Okay, these documents present figures or data that is valuable for stakeholders for different reasons or purposes. So let's take a look at what each of stakeholders would like to see or the reasons why they would like to use the figures in these reports. For example, shareholders would like to tell how valuable, how much the business is worth, okay, from these figures. They would like to tell how profitable or how efficient the business is in terms of costs and revenues. Also, managers would like to take a look at those values and would like to use those numbers to set indicators to evaluate the efficiency of the business. They will also use these figures to set budgets for the following periods, or set specific strategies for every department or area of the business according to the figures or the numbers they get. Employees, on the other hand, will like to look at the numbers and make sure that the business is stable, financially stable. Okay, I mean, they would like to see these numbers for job security. They would like to tell that they can keep their jobs. And if the business is growing, they would like to look for a chance for salary increases. Customers on their side will also like to see that the business is financially stable. Okay, basically because they would like to keep on getting the product they want or getting the service they want from the business. They would like to keep buying from them, and in order to get that, they would like to see that the business are financially stable, they are growing financially. On the other hand, suppliers would also like to take a look on your positive numbers. Why? Because if you have a trade credit with them, they would like to make sure that you have the money to pay back for that trade credit. So they would like to see positive numbers in your final accounts. The government will also like to see from those numbers that you are following the rules, that there's compliance of regulations, that you are paying taxes properly, that you are following all regulations or rules. And in terms of employment and unemployment rates, they would like to see that your business is actually being positive in terms of providing job security to people. Competitors will also like to compare your financial statements with their own. So they would like to tell the performance of each and see what they can do. Financiers like banks will also like to take look at these numbers for credit worthiness. In other words, they would like to tell that you are a financially stable business they can trust to provide loans when required or any other financial benefits. And finally, the local community, they would like to see that you are growing as a business, that your numbers are positive, that you're a stable business because you are a source of jobs, so for job opportunities, and also for growth because if the business is growing, the community is also growing. And if the community is concerned about the environment, they would like to look at the business in terms of sustainability, that you are environmentally friendly. So these are the stakeholders and the different reasons why they would like to see or know your financial statements, your final accounts. Now let's go to the very first of these two financial statements in this chapter, the profit and loss account. The profit and loss account is also known as income statement and is a record of the sales, revenue, and the costs over a period of time. Okay, over a time period. So in a year, the business would like to see how much they have sold in money, okay, the revenue, and they would like to see how the expenditure has been distributed, how much money has been spent on the different aspects of the business. So this document will be divided into those different aspects, and it will allow you to see how much is being spent on each of these aspects. So I'm showing you the document now. Okay, this document has three parts. Well, besides there's a heading with the name of the business. It will say something like profit and loss account for the year ending and the year. Sometimes it will also have a specific date, the date that specific accounting year is finishing. Okay, and it will report all the data from that specific year or period, like here. This is for the year ending 2019, for example, for the ABC Limited business. This is an imaginary business. So the very first part is called a trading account. Okay, there will be three parts in this document, and the very first part will be the trading account. The trading account is focused on the sales. Okay, so it will tell how much in money the business has sold, and it will also tell how much has been spent to make those products possible. Okay, the direct costs. So let's take a look at it. We have the sales revenue first. It will either say sales revenue or turnover here. Okay, these are synonyms, so you can pick up any of these two to write your document. Okay, most of the time it will be just sales revenue and how much the sale has been. For this year, ABC Limited has got $232,000 in sales revenue, in sales. Now we add the costs, the cost of sales or the cost of goods sold. Again, these are synonyms. You can pick up either of these two, and you have to subtract the cost of sales from the sales revenue. Okay, and you get your first figure, the gross profit, or also known as contribution. So the gross profit is what you get when you subtract the cost of sales, the total cost of sales, from the total sales revenue. The cost of sales only includes exactly the value of those products you sold. It doesn't include any products you kept in stock for the following year. Now there is an additional formula to calculate the cost of sales. So you want to get the cost of sales, you have to take a look at these other values. You have to consider that every year, when you start every single year, there are some products in stock. Okay, so you have to consider the cost of those products. Okay, so you have to consider this opening stock. Okay, you have to add the purchases for the current year, and then you have to subtract the closing stock, because obviously when the year ends, you will have some additional stuff in stock for the following year. So by adding and subtracting these values in dollars, in money, you are getting finally the cost of sales. This is one way to get it. Another way is just by telling how much was the cost for each of the product being sold, and then you just multiply it and get the cost of sales. But remember, it's just based on the cost of the sale, so on the products or services you have provided or sold in that period. And this is one way to get that value. So this is the trading account. It's the very first part. The second part is a little bit longer, okay? But then you can get the net profit from this second part. It is called, actually this is called the profit and loss account part. The whole name of the document comes from here. In the profit and loss account part, we start cutting specific expenditure from the gross profit in 3 steps. Okay, so step number 1, we take a look at the expenses. The expenses are a way to call the indirect costs. Remember, there were 2 types of costs. The direct costs, look again here, the costs that are related to the product or the service. And the indirect costs, the costs that are not related to the product, are usually administrative costs or other expenses that are not related to the product. So all of those costs are called expenses here, and they go here. In this case, is $78,000. We subtract the expenses from the gross profit, and then we get the net profit before interest and tax. This is the first step of the profit and loss account section. Okay, we get the net profit before interest and tax. Then we are going to subtract the interest. The interest is all that interest that you get from bank loans in the year. So in this year, in this case, because we're talking about a year. So this $1,000 goes and we subtract it from the net profit before interest and tax, and we get the net profit before tax. What's next? Well, you guessed it, is taxes. So we subtract the tax of the year from net profit before tax, and we finally get the net profit after interest and tax. This is properly called the net profit. Okay, so this is the three-step process you have to go. As you could see, so far we have started cutting from the sales the different types of costs or expenditure from our business. We first subtracted just the direct costs to get the gross profit. Then we subtracted the indirect costs to get the net profit for interest and tax, and then the interest, and then the tax, and then we finally get the net profit after interest and tax. Now we go on to the last part of the document. This is called the appropriation account. In this section, we think about the owners, the shareholders. They have to get their dividends after every year or after every period. Okay? If the dividends are being paid, then we have to subtract the dividends from the net profit. So we subtract dividends from net profit. In this case, it's going to be $22,000. And we finally get the last figure, which is the retained profit, which is what actually is left for the business. Businesses usually save this part of this retained profit, or as we said when we were talking about sources of finance, we can use this retained profit to reinvest it in the growth of the business. And this is the profit and loss account. As you can see, it's a step-by-step process of cutting different costs from the revenue to tell finally exactly how much we are retaining as profit at the end of the specific period. In this case, at the end of the accounting year. So this is what we're getting at the end. And it has three parts. You have to remember each of the parts. I mean, it's not really that hard. And have to consider that you're just subtracting from each to get what is left at the end. So this is the profit and loss account. This is it for this document. It's actually, as I said, quite simple. We just have to remember the parts. And this is it for this part one of the chapter. In the following part, we will be presenting the balance sheet, which is the second financial statement in this chapter, and a few other concepts that we have to consider in finances for this chapter. So this is it, and bye-bye.